Welcome to the Building Web3 podcast. Today we're joined by Kaj, a managing director of the $11 billion Boston Consulting Group, also known as BCG. Discover how blockchain is set to revolutionize industries with tokenization, enhanced process efficiency, and new market creation. Listen for insights on navigating regulatory landscapes and advice for Web3 founders on scaling their ventures. Remember, nothing here is financial advice. Welcome to the Building Web3 podcast. I have my good friend Kaj. He's the managing director of BCG Platina, global co-lead for digital assets and blockchain. Kaj, before we get too deep into BCG and what you're doing over there, could you give us a brief background into yourself and what got you into this Web3 space?
Absolutely, definitely here. So I'm back about trading, and 2001 when there was this internet hype, I stepped into our BCG Platina setup, which is a pure tech consulting company, and started my career as a consultant, so much more going from the business into the tech space, and then go on there. So it was a lot of times learning but doing, from the internet bubble time to the downturn to the new economy, and then also Web3 phase.
Awesome. And can you give us a brief introduction into what you do at BCG and kind of what the mission is?
Sure. So Platinum as such is the technology arm of BCG. We are the tech experts, but also can make the bridge between the technology and the business side. And that's, I think, very, very crucial, because it's not tech for tech or business for business, but there's also and always a kind of link between the two worlds. And in that, we, next to the deep technology expertise, we also bring the expertise in how to transform and implement these elements in a large-scale projects. So specifically in Web3 and digital asset space, we always come from the business side. We always ask the question, okay, what is the business problem first? Second, is it really necessary that we need blockchain? So are the capabilities of blockchain really the driver of this specific use case? And then what would be literally the platform? So we have blockchain agnostic, as well as how would you need to develop an ecosystem in that space, not to only say I do pilot or POC stuff, but I really go for scale, right? So these three key elements are always in the heart of what we do.
Absolutely. Let's talk a little bit about, some people critique the blockchain space, saying blockchain is a solution in search of a problem. What kind of problems do you think that blockchain is well equipped to solve and that you see, clients implementing?
Yes. So as I said, we come from the business side, and typically when blockchain capabilities much better suited for these questions than traditional technology is if you have a more network environment. So you don't have a hub and spoke model, like one big company in the middle and everyone connects only to that company, and then you have a one-by-one transaction mechanism. It's much better suited if you have a network effect. So everyone trades or does transaction with everyone else. That's number one. Second, the purpose is also that ideally you have divergent interests. So the incentive models of the different participants should, in one way or the other, be divergent, so that you need a dedicated proof of data, of information, of the transaction as such. And this can be done by the technology, by blockchain as an immutable database.
Absolutely. And do you see any specific verticals that, we talked about this hub and spoke model that it's not as necessarily good for? What kind of verticals do you see are more adopting of the blockchain ecosystem?
Yeah, so I'm primarily working in the banking world. And obviously here in the capital market setups, you do have a much more hub and spoke model as of now, also because of the regulation. But if you go for DeFi setups, there could be something equivalent, because you have multiple companies who are issuing an asset, but multiple people who want to buy them, and therefore having an immutable record who owns what kind of asset and who is trading what in a certain way would be a critical element to make it more efficient. Now, we have to obviously comply with the regulation and the users. But in new developments in KYC and permissions chains, I think even the traditional financial markets companies can play in this role in this field, even with complying still to the regulation.
Absolutely.
And
And
it's starting to go there, right? It's starting to go
yeah.
there. Regulators are really better understanding this field and the technology, and that helps by then applying the technology in a proper way.
And we've definitely seen some increased interest from the banking sector. BlackRock comes to mind, of course, as
Yes.
Larry Fink was saying, like everything will be like tokenized and on the blockchain. What benefits do you think this really brings to the banking sector? Let's say like tokenization or having a blockchain for, BlackRock or Morgan Stanley, these kinds of companies.
So on the one hand side, you see things around the process efficiency, right? So if you take a immutable record of who is owning what, on some asset types, which are mainly not the 10 vanilla ones like structured loans, where you have a very good infrastructure as we speak, but more the non-traditional ones, there it is not that obvious who is owning actually what kind of asset and who is transferring it to when. So therefore, you have multiple different players trying to figure out and net the whole thing and clear and settle a transaction. This, if it's the asset is tokenized and all the blockchain, can massively increase the speed of that. That's number one. Number two, especially when you come into real world assets, we can see that there is a good portion of efficiency, but also new markets that can be explored in terms of the tokenized asset, a real world asset, actually fractionalize it, and therefore can create a secondary market with much lower ticket sizes. So we're not talking anymore in millions, but we are more talking about in thousands. Because of the standardization and automation effect, you can actually create a much more vibrant secondary market with liquidity.
So, okay, we talked about two different concepts there. So we talked about non-traditional assets and people that might not be from this finance space. Could we fill in the gaps for what do we consider these non-traditional assets? Would these be like bespoke derivatives, that this would be something that tracks the price of another asset?
Well, there could be one of the derivatives. It could be also just a non-listed equity, right? So non-publicly traded equities or private assets. It could be also private credits and private loans, right? These are actually these elements where it can take place. And we see it, sometimes already right now, even in your more traditional setups like collateral with repos. JP Wong is a good example for that one. There are trillions of dollars traded a month on these new setups as well.
And then we talked about RWAs, so real world assets, and then fractional ownership. For people listening, they might be like, what's the benefit of, let's take real estate for example. They'd be like, well, there's apartment buildings and then there's apartments inside those buildings. Isn't that fractional ownership? Like, explain to them the benefits of like this new kind of fractional ownership and what that really entails.
Yeah, especially when it comes to larger infrastructure projects like a bigger community building or industrial building. Typically, these are millions of dollars which need to be invested into that once you set it up. Now, you can say you ask high net worth individuals or even institutional investors to build it up, but also, especially when you give a small ownership rights of this building, you can also address it even to retail customers, right? The moment you have a setup, meaning a token of a partial ownership of such a building in a standardized form available, it's not extra cost, right? It's exactly the same cost as everyone has to go through. And it's primarily automated, and then you can actually also create a secondary market for this. Right? And not being held in 5 or 10 years time, holding the asset and cannot be sold anymore.
Absolutely. And let's continue on this kind of real world assets, this fractional ownership thing, because people are probably familiar with REITs. They're probably familiar with ETFs that may track real estate values. And they're saying like, well, as a retail investor, I could always, put money into that ETF or into that REIT. What's the large benefit between this like new tokenized version and that traditional ETF version?
Yeah. So the tokenized version is you are a real owner right, of this department or real asset. And in the ETF, you are kind of an indirect owner only. So meaning if the company or the companies in between might go south, it might hit you, and therefore you cannot get easily the assets out or your money back. So in the real asset tokenization setup, it's literally the same concept of either you buy stocks and then you're specifically buying very specific stocks of the company you want, or you're buying the fund, right, which someone else is then allocating your money to different stocks. So it can be much more targeted on the one hand side, and you're the real owner of that particular apartment building or real asset.
Absolutely. And let's take we always use it like this exercise at BlackRock is we call it like the life of a transaction, but we'll call it the life of working with BCG. So let's say, I'm a new financial institution and I'm coming to you guys. Like what kind of questions would you be asking me to see if like blockchain would be a good settlement? If you have any particular case studies, feel free to use those instead.
Yeah. So one was, for example, where it was literally a question of should we go further down as a financial institution into the blockchain setup? And the key question first is, where are they today? How much do they understand? What do we have to potentially even educate the company? That's number one. Second, what are the different areas they have now a really decent revenue pool already? So where is their business? In which areas is it? And second, what are adjacent areas where they had a right to win as well? So these are much more SEC business questions, right? And then based on that one, we can say, okay, in which processes of these different areas do you have actually a combination of the setups I mentioned before? You're in the middle of a network transaction setup. You have potentially different areas where companies or the market participants have divergent interests. And based on that one, you might be the one who can actually develop a certain ecosystem around this. So not only to develop just a POC or pilot, but really bring to scale. Now for this one, ideally the company has either both sides, so the sell side and the buy side connected, or they build up a platform and then have other partners who can bring with great leverage the sell side and buy side, because the platform as such is great, but without a transaction on it, it will never scale, right? You need to connect always the buy and sell side of that. And that's especially in the financial institution area, a key element which is currently still missing in order to bring these POCs to scale.
Mm-hmm. And you mentioned earlier, I believe you guys were essentially blockchain agnostic. Like you'd look at the available solutions and kind of help the client make a determination on what would be best suited. From your experience, have you seen, maybe like EVM compatible blockchains or Solana, or where do you kind of see many of your clients kind of go towards? Or is it
that is a good question, and because it's currently a big debate in the sector. And it highly depends on where you started and what also the regulator started or where they are potentially today. So that depends on the different jurisdictions. So on the one hand side, we have companies who are still believing very much and only is literally on private chains. So the likes of R3 and so on. And it's also a lot of times driven by the regulator that's the only thing we allow. Now, others are moving forward and have potentially got the luck that they haven't invested into private chains yet. So therefore, they're still completely free in their new investment decisions. And as education can further, maturity of the blockchains can further, and also the regulator can further, it might be much more that we talk about a permissioned blockchain or as a private chain, right? And that can give you some option value to later on, if that's your even further progressed, to potentially even go to a key private chain later. But with a private chain, a lot of times you're locked in that setup, and therefore you try to stick to it and move forward on that. And others have potentially the flexibility to already go for private topic, version topic.
It's very interesting because I don't think we've ever talked about private chains on the podcast. So could you give a brief explanation? Because everyone's like, oh, but the blockchain is public all the time. What do you mean private chain? So could you give a brief explanation?
Sure. The blockchain is literally a blockchain setup where every node who's running the blockchain is very controlled and is governed by a dedicated set of nodes only. So no one else can access or have the possibility to log into the blockchain as such. Everything like EVMs also, they're private. Everyone could look into the transaction history of the EVM, the respective one. But on that one, you don't have access to it, right? And therefore, you cannot look up anything except for if you're like a member of the nodes or by invitation. Then therefore, I have the software code to run it.
Absolutely. And, as you're very influential in this blockchain space, especially talking to companies, could you talk about how you see the blockchain technology kind of evolving in the next few years, especially as it pertains to these larger brands or larger companies you work with?
I think we will see further question on multiple different areas. On the one hand side, EVM is progressed. We saw layer 2, which has helped significantly in terms of scaling. So we are going into a setup where hopefully that question of blockchain is being resolved in one way or the other. We also see other companies or blockchain setups like Solana, which go in a bit of different route, and I heard at least at Consensus some solutions for some of the availability questions they have. And on the other side, we also see that even Bitcoin potentially or has a layer 2, and therefore be able is going on a hopefully also matured stage to get to smart contracts. So I think the diversity of different chains will continue, and that's, in my view, that's actually good because it fosters innovation and the innovation speed. So therefore, I don't think we have seen in the next, or we will see in the next 2-3 years a steady state of innovation and how in general the blockchain industry will progress, not will stay, but it will continue to go further. Therefore, for companies who want to go into that space as a financial institution, but also others, our primary principle is typically going for flexibility. Any setup you design has to be, from a technical perspective, as flexible as possible so that you can exchange one chain or the other in the future as well without completely destroying whatever you have built, and therefore all your investments are gone, right? So that is still a crucial element because we don't know probably what kind of leading blockchain we will have in 2030 or so.
Yeah, I think that's a very salient point. One, there will be tons of development. Two, we don't know exactly how it will interact. I've been very interested by TON and what Coinbase is doing, and now what Solana is doing with Links is, where Blinks is. We don't know how this will even impact, say, social media. Like in the past, there was the Libra project, but this seems to all be coming back around with TON. So very interesting areas. Now, are you seeing, because I believe you're largely focused on EMEA, like Europe, Middle East, Africa, are you seeing a lot more uptick in blockchain interest there, or is it 2 years ago people were really into it? Where do you kind of see the interest level rise in your geo?
Yeah, we have the luck, I would say, to have now MiCA, so the financial the regulation for blockchain digital assets now finally in place, and it's good. It helps that many companies are having a controlled framework how to in which they can operate. And based on that one, I think in the last 2 or 3 years, a lot of these attempts, research, but also QCs have been more on the background than the forefront in marketing and so on in Europe. And this is slowly going to change. So we saw, I think, a couple of weeks ago, the announcement of Deutsche Bank that they partnered with Bitpanda in providing also cryptos to their retail customer. Outsourced, right? Like a similar setup like you'll just pay single payment back in the day, but in the Eurozone, right? And I think that is a observation we will see in the near future as well, given that MiCA is now in place and is clearer what we can do from a regulatory standpoint or not. Second, I think the drive, or we say the ECB, so the European Central Bank, on digital euro, so the central bank digital currency, gives a direction that in one way or the other, this CBDC will also come in Europe in, let's say, before 2030. I hear different dates by now, but it's at the end of the day not only a central bank decision, but it's primarily also a political decision, and you never know how long these decision times can take, right? And the same will holds true for London, so UK. But also the Bank of England is pretty active now in remerging or redeveloping the perspectives on the regulation for general digital assets and CBDC as well. So I think more activity is happening in Europe. And I think that's very good. And based on that one, companies in different ways are tapping into that more openly or more transparently, and not anymore in the background. In Africa, it's very different, right? So even many stable coins, if you have a high inflation, any stable coin like the USDT, USDC is probably much more stable and therefore useful for a merchant or a retail customer than the local currency if you have an inflation of 10-20%, right? And therefore, the setup is completely different than any developed country or high live in. And therefore, their needs and also what they accept as being risky or less risky is very different than what we see here in Europe. And therefore, we see quite a number of companies in the payment space exploring quite a bit in these developing countries.
Yeah, from being in Latin America, I know many people are more familiar with cross-border payments, like more familiar with crypto because they're sending money back and forth from the US or to people in other countries, or yes, the inflationary aspect where you're like, hey, I need someplace to store the value. So that's very interesting. And I'm sure it's much more upticked in, I know in Nigeria specifically, there are a bunch of crypto creators out of that space. So what are some of the main problems that you see when, a customer or client comes to you and they're like, hey, we're trying to evaluate Web3 technology, or like, hey, we're trying to implement it? What are some of the main challenges you guys find?
Still, unfortunately, when we discussed it a bit, the question is coming much more from we want to use blockchain than from a business problem perspective. That's still a key element of it. Second, in the boardroom, it requires still a lot of education, especially from blockchain is not Bitcoin and has multiple different facets and doesn't need to be crypto only, all that good stuff. It's still a point for further education. And third, but I'd say it's still the regulation in one way or the other. It depends on the restriction, obviously. In some, we still have, let's say, not very stable and clear regulation, but it's still in flux. And therefore, companies are just afraid if we do a step forward in that space, it might hit us badly, and we couldn't even imagine and estimate it and anticipate it before.
Given that those are the larger questions, what kind of advice do you have for Web3 founders that are either looking to enter the space or are already in the space and have those three main problems overhead?
Yeah, so now let's have a look at this more startup setup, right, for Web3 founders. I think also the main part is product market fit. Is there a market? Is there a business problem? And how do you solve it? It's the fundamental what needs to be clear. And then, secondly, what's your right to win? Are there other competitors? Why and how are you better than the others? And what I mentioned, the bookends, right? The sell side, buy side. So are you able to connect really the entire value chain in order to make your product not only as a POC overall, but really used by a significant number of people? That's, I think, the fundamental. Then what we actually also work quite a bit with layer ones and also startups in that space. The second one is, after you have done that, a larger question is about how do you set up your company? So very classic operational target operating model, business model questions, and how do you structure it? Because a lot of them are actually not in one location; they're spread over multiple different locations. And how you create a setup which is still efficient. That's number two. And last but not least, we help them a lot in creating these two together, and then how do you go to market? How do you affect the right actually use cases for layer ones which are fitting to your brand and your capabilities of your particular blockchain as well?
So it seemed like there was one, of course, finding product market fit, then the product development, then the marketing itself to try to attract new users. Do you find that startups kind of struggle with one of those particular ones, or it's kind of just like, hey, if you don't even get product market fit, you're kind of dead right from the outset?
Well, it depends on where they are in their journey, right? Some think they must have found a certain product market fit, and then it's good to double check that. Sometimes we really do significant adjustment, actually much smaller ones, but it typically leads to a better understanding of what are actually the features of my product I should prioritize first and really build that at the beginning, and what can I deprioritize for a little bit later. Yeah, that's the double check. It is for many of them very helpful. And then later it comes to really if I have a few customers, maybe how do I scale? How do I create a company setup which is really efficient and allows me to scale? That's especially in the decentralized environment they are living, like everyone is partially working from different locations. That is really tricky, given that time zone differences. It's much harder to bring a message across, to create a company DNA, and so on.
Yeah, this is a question I didn't even think would come up, but we talked about kind of the operational problems of having people in different time zone. Do you find that certain companies, like there's a certain technology stack where you're like, hey, we recommend people go on Jira, or like everyone in Notion, or you guys are relatively agnostic about that? How do you feel about this?
Yeah, so we are pretty agnostic to it, but yes, these are in a development area. These are exactly the typical tools you use, right? But it's much more than that. It's much more. How do you get everyone on the same page? What is the direction of the company? How do you ensure everyone understands why something has been happened? Maybe in the half day before I woke up, right? And why should I can I link to it? That's much more on that level than necessarily how can I link my code based on the rest. But it's on a higher level where a lot of companies are struggling to ensure everyone knows where to go. And second, the quality of what we deliver is consistent.
Absolutely. Yeah, that makes complete sense. Are there any like notable partnerships or collaborations you guys have done and formed that you could mention?
It's for that way. On the blockchain side, we are, as we said, agnostic. We have probably worked with 10, 15 different layer ones.
Wow.
However, also publicly known, we work as we speak with specifically two actually together on projects, and we published also white paper about them in order also to help them exactly in the different areas that I mentioned. When in other areas, right, like hyperscalers and so on, we pretty much work with all of them, and they help us also to, let's say, get their perspective on blockchain or digital assets and Web3 on our end.
Now, is there a size of company when people are evaluating, like, hey, I need some consultants, or like I need some help here? Is what size of company would you guys typically work with?
The size actually doesn't really matter so much. It's all a question of how big is the potential. So I worked with even startups with 20, 30 people, but they already had taken the efficiency. They already had a good product, and there's a big market out. So that our input could be a 10x or even more of what it would cost. Right. So that's how much more how we think about it.
Absolutely. And if listeners are really interested about like how they can select different blockchains or how they can get in touch with you guys, how to work. I think you guys even published some research reports. Where's the best place they can keep in touch with everything you guys are working on?
I think one is bcg.com. A lot of our reports are published there. Even more are published on my LinkedIn profile. So there I publish every report that comes across in that space, and we'll get direct access to this one.
Perfect. And what's your LinkedIn profile so people can search it?
Just Kaj Burchardi and then BCG Platinion. Until you find it directly. There's only one person like that.
Perfect. And I'll put all the links in the description. So if people are like, where was that exactly? Check the description. But yeah, thank you so much for coming on here and to all the builders in Web3. Let's get back to building the future of tech.